Bitcoin versus fiat currencies, a outlook on Bitcoin's advantages. The topics that we are going to cover today are decentralization and autonomy, limited supply and deflationary nature, security and transparency, global accessibility and financial inclusions, adoption and mainstream integration, and finally, challenges and future outlook. Let's start with the first one, decentralization and autonomy. Under this, we'll cover freedom from centralized control. Bitcoin operates on a decentralized network, free from the control of government, central banks, or financial institutions. Unlike fiat currencies, which are subject to monetary policies like quantitative easing or interest rate adjustments, Bitcoin's rules are enforced by code and consensus. This decentralization ensures no single entity can manipulate Bitcoin's supply or alter its protocol for political or economic gains. For users, this means true financial sovereignty, the ability to send, receive, and store value without intermediaries. B. Resistance to inflation. Fiat currencies are inherently inflationary, as central banks can print money indefinitely, eroding purchasing power over time. Bitcoin, by contrast, has a capped supply of 21 million coins, making it immune to inflationary pressures. This scarcity positions Bitcoin as a hedge against fiat devaluation, particularly in economics plagued by hyperinflation, for example, Venezuela or Zimbabwe. Next, we'll go to limited supply and deflationary nature. Fixed supply of 21 million. Bitcoin's supply is algorithmically limited to 21 million coins, with new coins entering circulation at a predictable diminishing rate through halving events. This contrasts sharply with fiat systems, where money supply expansions can lead to currency debasement. By the year 2140, all Bitcoin will be mined, ensuring absolute scarcity, a feature no fiat currency can replicate. Scarcity and store of value. Bitcoin's scarcity mirrors properties of digital gold, offering a deflationary alternative to inflationary fiat. Over time, its purchasing power has trended upwards, attracting investors seeking to preserve wealth. While fiat loses value annually, for example, US dollar has lost over 99% of its purchasing power since the 1900s. Bitcoin's fixed supply makes it a compelling long-term store of value. Scarcity and transparency. Bitcoin technology. Bitcoin's blockchain is a public decentralized ledger secured by cryptographic algorithms and a global network of miners. Each transaction is verified through proof of work consensus, making the system highly resistant to hacking or manipulation. Fiat systems reliant on centralized databases are vulnerable to cyber attacks and human errors. Immutable ledger and fraud resistance. Once recorded on the blockchain, Bitcoin transactions cannot be altered or reversed, eliminating the risk of chargeback fraud common in credit card systems. This immutability ensures transparency and trust, as everyone can audit the blockchain. Fiat transactions, however, often involve opaque processes and intermediaries, increasing fraud risks. Global accessibility and financial inclusion. Borderless transactions. Bitcoin enables near instant low cost transfer across borders without intermediaries like banks or payment processors. Sending fiat internationally often incurs high fees, for example, SWIFT transfers and delays. For migrant workers sending remittances, Bitcoin offers a faster, cheaper alternative. Empowering the unbanked. Over 1.4 billion adults lack access to traditional banking. Bitcoin requires only an internet connection, allowing the unbanked to participate in the global economy. In regions with unstable currencies, for example, Nigeria or Argentina, Bitcoin provides a lifeline for preserving wealth and conducting transactions. adoption and mainstream integration. Merchant acceptance. Major companies like Microsoft, PayPal, and Tesla now accept Bitcoin, signaling growing trust in its utility. Payment processes, for example, BitPay, simplify Bitcoin transactions, bridging the gap between crypto and everyday commerce. While fiat systems remain dominant, Bitcoin's acceptance is expanding rapidly. Institutional investment. Institutionals like MicroStrategy, currently known as Strategy, Square, and Grayscale have allocated billions into Bitcoin, recognizing its potential as a digital gold. Bitcoin's ETF and futures market further legitimize it as an asset class. The institutional adoption contrasts with fiat, which faces declining confidence due to debt-driven monetary policies. Challenges and future outlook. Volatility and scalability. Bitcoin's price volatility remains a barrier to everyday use, though this is expected to decrease as the market matures. Scalability solutions like the Lightning Network enable faster, cheaper microtransactions, addressing early limitations. Regulatory evolution. Governments are crafting frameworks to integrate Bitcoin into financial systems without stifling innovation. El Salvador's adoption as legal tender sets a precedent, while the EU's MICA regulations aim to balance oversight with growth. Conclusion. Bitcoin's decentralized architecture, finite supply, and global accessibility positions it as a transformative alternative to fiat currencies. While challenges like volatility persist, ongoing technological advancements and growing adoption suggest Bitcoin will play a pivotal role in the future of finance, complementing, if not displacing, traditional monetary systems. As trust in fiat wanes, Bitcoin's promise of financial autonomy and scarcity ensures its enduring relevance.